Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday UTC. Big shout out to everybody joining the stream today. I hope you all had a cracking weekend, and obviously to everybody that's going to be watching this on catch up. So, I'm going to stay true to my word this week, and we are going to keep this a slightly shorter stream. All right, we're going to take a look mainly at Bitcoin. All right, and then we're just going to do a little touch upon ES and the DXY as well. Steve Etienne, AL. Hey guys, really lovely to have you on the stream. So, not going to hang about too much today. Obviously, guys, if you've got any questions, do fire them across. Let's make this full screen, and let's just dive straight into what we're saying. Nipar, good day to you too, my friend. So, let's have a look at this. First of all, one thing that I've added on for this week, which I've done for some of our membership as well, which I just kind of find helps some people capture trend. All right. So you see these dotted lines, the red dotted line that we've got down here and the green dotted line that we've got here. This is the daily 50 being the red and 20 being the green moving averages, right? Now, they're set to a daily time frame, right? So that means that I'm currently on a 4-hour chart. These still represent the daily. If this is something you want to do, and let me show you as for why. WH, Jojo, Craig Parker from the South Coast. How are we doing, guys? Really good to hear from you all. So the reason I do this, and I know this looks a little bit zoomed out at the moment, but just to give you guys an idea, these can really, really help people when it comes to understanding the trend, right? So now let's say, for example, we always want something that controls our high time frame trend, right? So when we're under the 50 period daily moving average and under the 20 period daily moving average, we would be favoring short trades, right? So let's just highlight that for a second and put that in red. Yeah. And in fact, actually, we're under them until we get to here, right? So now we have a strong close above this section here until we close back below represents when we would have a long bias. All right. So it's a really, really interesting one. Crypto Hand, how you doing, buddy? From NC, USA. Welcome. Great to have you there. North Carolina, I'm imagining. My cousin, funny enough, ended up in that beautiful part of the world on a Google scholarship many years ago. Nipar, not sure if you got my tweet this weekend. I didn't, unfortunately, mate. I don't work weekends. I always try and take a lot of downtime at weekends, but please do tag me across in it again and I'll take a look. So when we're looking at these, right, really, really simple concept. We're under both sets of moving averages. Then we want to be favoring bearish trades, right? Now, I'm not going to go into this in crazy amounts of detail now because I just want to talk more about the representation and then so we can look and kind of get this stream finished off in like half an hour today, right? But you see the idea, right? Now, you can work out different parameters for closing rules. And what I mean by that is typically once price holds above one level, it very often then can reject. So here at the 20, reject at the 50, right? Then obviously when we have a strong close below here, we're obviously favoring bearish trades, right? So what does this all mean? Well, quite simply, if we drop to a lower time frame now, and let me just zoom back to where we were. Now, I've just dropped this down onto a 15-minute chart. I will typically favor executing on a 5-minute down sort of a 3, 2, or sometimes a 1-minute chart, but that's for day trading, right? In terms of price patterns that we're looking for, or what I'm looking for in terms of entries, then that's fractal. So they work across different time frames. So it's just important that you understand your trading time frame, right? And your execution time frame, all right, and where you want to be taking those bias from. So here we are in this area, and we're not going to cherry pick. We're just going to use this example here. We've rejected off the 50 period moving average here, yeah? So then what we're looking for typically is we want to see a break of structure, right? So we're in an uptrend here. Yeah, we set the low, higher high, higher low. We break down here and we take out the structure. So now we're favoring short trades from here, yeah? We want to see price drop, pull back. We're looking to short, right? Now, you've heard the phrase buy the dip. When we're shorting, the opposite phrase to that is sell the rip. Yeah. So for want of different terminology, what we would be looking for quite simply is from this moment on, we're bearish. When you're studying the charts, when you're back testing, what I like to do is just put a vertical line down the screen, make it red, make it stand out. So now you know you're in bullish territory, right? Meaning that the bullish trades are what are favored. Now, depending on your entry strategy, what, you know, a standard approach without getting too technical into entries would be that you look for corrective moves. Yeah. So like this. All right. And as we follow the chart down, we can see, okay, price comes down, corrects, sells off, right? Let me just do that with this quickly, just so you get the idea, right? But we can see, right, we have the drop, you have the pullback, yeah, drop, pullback, drop, pullback, yeah, drop. Obviously, this pullback here, which led to this opportunity to go short. Now, this isn't saying this is some magic formula, guys. Obviously, we need to really dive into the charts in terms of the TA to make sure that we're finding suitable entries. But just on a very basic premise, it can be really, really helpful, yeah, to sustain a bias. Now, you can see what happens. You're trading it down, We're in a bearish bias. Now, what I like to do, because obviously, you know, you could be shorting these, but then, you know, you're getting stopped out because price is having a corrective move here. So those of you that know me know that I use the Dr. Fuse index sessions as well as the Tradeinator ones as well. If you've got any questions about them, do ping me towards the end and I'll happily send you the links. But what I find it helps me do is kind of highlight these areas in a little bit more detail, right? And what do I mean by that? Well, if I want to favor my trades being taken in the AM and the PM sessions here, yeah, these are the New York AM and PM sessions, then as we're refining these down even more, yeah, then what we're talking about is finding executions in this area here, right? So what I'm looking for here is, say, this pullback, market structure break, which would be here, yeah, or the resuming of the market structure to the downside, and then I'd be shorting that trade here, right? And again, what we're doing is when we're looking at price action, we're looking for inefficiencies, our fair value gaps, which provide a magnet for price. Why? Because the move's very inefficient here and the market will want to rebalance that at some point. And then again, what we're doing is we're then using our time frames to just give ourselves favorable setups. Yeah, so this might not look like a lot in here, but I can assure you, once you take this and you measure the move from top to bottom, yeah, you've got a 2% move there. For a day trade, that is absolutely plenty. Now, you need to dive into that and make sure that you've got an entry, right? I would imagine it would be somewhere around here. So let me just show you very quickly what that looks like. If there's any questions on the premise or the basis of this, hopefully I'll fill them out for you very shortly as we move forward. But the idea in here is that on a lower time frame, 5 down to a 3 minute, something like that, maybe what you would be looking to do in here is, for my particular strategy or how I like to see it, I like to see highs or lows raided. Yeah. So I'm seeing it that we've got these highs here, which are kind of act as relative equal highs. So you can mark them up as that, or you can just simply mark them up as liquidity. And what I like to see is price running liquidity, right? Meaning that you get this impulse move higher, price runs liquidity, it takes out some stop losses, generates some buy orders that can then get filled with sell orders, right? So it allows bigger players to position themselves in the market. So considering that, we would be considering this our raid, if you like, yeah? Or for me, I'd consider a raid a move on prior levels and a sweep, the sweep of the prior swing. Okay, so I'm just going to label this up, as our raid short. Then what I'm looking to do is I'm looking for a breakdown in structure, right? So I want to see this low taken out. Which we can see happens here. Let me make that a bit thicker for you guys. And then what we want to see from here, first of all, we've got a nice clean target down here, these lows, right? Now, we've seen price come up, set the low. We've come here. We've had this move through. We've had this expansive candle. Yeah. So you've had a high volume move through here, and now price has come down below our area. Now, what I would be looking to do is I want to take the move down. Yeah. And I'm looking for either a retest of this, which would be one strategy that I'd use. And I call this like a breaker line. In which case, if we were trading this, then you would look to have your entry on here. You'd have your stop loss either above this high or favorably above the prior in case you get a slightly deeper retracement, which we quite often do with crypto, right? And then here you've got yourself a 2.81 trade set up, okay? That would be how I would look to enter that. And I'm entering that based on a bearish bias, all right? So Dan, hello, buddy. How are you doing? Good to see you on there. I'm letting everyone down today, mate, from the tea lovers of this world because I didn't get time from my meeting this morning to put the brew on, so I'm gonna enjoy one after this. But I hope you're well, mate, and everybody else as well. WH, Knit, everybody else that's joined the stream. So to just put it in perspective, that's what I'm looking for, and what really helps me ascertain this, right, is just having that understanding of bias. And I find that adding a daily 20 and a daily 50 moving average really helps with that. So if that's something you're interested to do so that you can see that and maybe, put your own TA on it, see if it's something that's useful. I use the MA, the moving average, that's just the standard one on TradingView. And all you need to do is go onto your inputs, right? And then change your time frame. If you choose it to chart, it will represent the chart that you're on, right? If you choose a different specific one, it will keep it locked in to that time frame, right? So that then when we zoom out, like we can see here, it adds on here. And the other thing that I do is on style, I change it from line to line with breaks. All right. And then what it does is it gives you these dots. It's just not as obtrusive, Oh, hang on. Sorry, let me go back on that a minute so you can just see that actual trade as well before TradingView runs away with us. All right, so here's our trade. We can see again, just by nice conservative targets, right? Yeah, we had this move follow it up, right? And it would have taken out our stop loss, first of all, because once we get to target, our stops go to entry and we've closed out the majority of the position, yeah? So this was our trade. We've got a beautiful 2.81R trade. We can take heavy profits there. We're in and we're out in the day. We missed this massive move here, or I missed it, purely because it wasn't triggered within my system parameters, right? But I would have caught this next one, yeah? So again, exactly the same principles. We've got resting liquidity above here, yeah? So we take this and also this as well here, right? So this is our raid. Yeah. And then what we're looking for here is we need to see this low taken out, right? Now, as price comes down here and we get this deeper correction, what I'm looking for is price. I'm looking for this leg down, right? The leg that breaks structure, okay? And the reason for that is I want to set my entries in premium, right? So premium discount, the concept, or under my experience from many years ago by ICT, I'm sure others utilize it as well. It's the idea of within a range, a trading range, you have a premium and a discount area, and you want to be shorting from premium and longing from discount, meaning that you've got the odds of the market are resting in your favor. So for me, I'm looking for inefficiencies that now exist within premium, right? And this is my favored trading system. I find the inefficiency, which is here. Okay, we project the fair value gap forward. Okay, and with these, you can be really, really aggressive, right? So first of all, once we retrace to this area, we want to note where the key swing low is before it, right? So immediately we've got an initial target. Then we can afford to hold that target for lower targets. Because we're on a lower time frame, it's more difficult, but you want to be looking left here for any kind of consolidation like this that price may reject at, or an order block, or a naked or an untapped low, right? But even with this one, all we're saying to ourselves is, if this is true, fair value gap gets respected here, We want to take our short position. This would be our trigger. Now, we don't know when price is going to return to this bit, but for me, I still like to see it within our AM to PM New York session, right? If it starts to roll over to the following day, I'm not as interested because the price action can kind of refresh itself a little bit on the next day based on the trading range. And then we can take a nice clean target, which can either be the candle that starts the fair value gap move. I prefer to target the swing, it just gives you a little bit of extra safety. And then we always want to add on a couple of pips, right? Nothing crazy, but just enough. And then again, we're just targeting this low, all right? And we can see we have a nice 3.57 trade there as well, all right? Now, this is all made possible because of our high time frame view, yeah? So again, we're favouring shorts down here, yeah, which we can see we were favouring longs here. And then if we zoom in on those areas, which obviously because this is on a this is on a higher time frame, right? But these little dots here represent that trading time frame for me. So if we line these little dots up here, we can see we have this move, sweep, nice move higher. If we line this dot up here, we'd be looking for a sweep on the lower time frame, so on and so forth, until we got to here and our system failed us, and then we break structure to the downside. So maybe we take a couple of losses there, or maybe we take a break even on one and a loss on the other. But what it allows us to do is jump in on the majority of these moves and catching the larger moves, right? And that's why bias is really important. Also, then when we lose this here and we close below here, then we have all of these opportunities here to short. And what you can see is the bigger moves here are the moves to the downside, all right? Now, once again, what we've got here, we reclaimed the 20-period moving average. What I like to do here is if we reclaim this and retest it, yeah, then on the structure shift to the upside, which we get here, right, above this higher, then we start to push up towards the 50. And here, the reason that we've got a short bias here is because we can see the clear rejection here. The break of this low here, yeah, puts us bearish. And once again, we can see from our red line here that we're favouring bearish trades to the downside. All right. So let me take that off of that, and let's get into the meat of what we're looking at today. Yeah. Let me pop this onto the daily, clean this up marginally as well, and we'll take a look. Craig, quick question. Do you plan to build a position that is multiple entries? Yeah, I do. So like compounding, basically. It's something that I'll cover in a video with you guys. It's something I tend to do a lot more on swing trades rather than scalp so much because of just the intraday volatility being a little bit less predictable, in my opinion, or you can kind of open yourself up to some of these larger moves. But what I'd look to do is with that situation is I'm looking to take an entry that's higher risk, higher reward. And what I mean by that is if we look at the interactions, let's just shut this and this, right? If we look at the interactions up here as price comes down, then if we were looking to short this, right, then we'd want to be shorting it because we've come into this high time frame order block here, which I believe it is a weekly. Now, on that initial reaction here, we'd want to be shorters quite high up in this move rather than waiting for confirmation to the downside, purely because it allows us, if we're wrong, we have a small loss. But if we're right, we can compound this move on the way down, obviously moving our stops and moving our average entry, but protecting our position, right, and our profit. So yeah, no, absolutely. But definitely remind me, that's something, especially as we start getting into a bit more stable market conditions, we'll be looking a lot more at swing trades as well. There we go. Dan P, thanks guys. Yeah, all of your likes and bits and pieces are massively appreciated, as is your feedback as well. If there's anything else you'd like to see on the channel or any areas you think that I can improve, then please do let me know. So, going to just bash this quick top down for you in the next 9 minutes, right? So, weekly chart. Right, this is where the key of my analysis starts. And what we can see here, as I released in the Bitcoin report last night, and I have the pleasure of doing the Sunday Bitcoin report, which I love because it's a great way to set yourself up for the week ahead and what assets we're looking at. Now, Bitcoin price action of weekends can be quite thin because traditional markets are closed. Therefore, you drag some of the volatility out of the market. Also, pumps and dumps that you see at weekends can also sometimes be quite questionable, right? Because then when the volume returns to the market, when the traditional markets open on Monday, you can often see, price go against your initial TA that might have been formed on the weekend. So we've got this here. This is where we believe orders are going to reside. Why? Because this was the last up close candle before we had this sell-off. We left an inefficiency, a fair value gap, when we left, which adds more validity to the order block. When we've revisited the order block, we can see this immediate reaction and this sell-off. Where to? This key low, right? We've then purged through this low, another inefficiency, fair value gap here. The market's rebalanced this, yeah? But now we've left this weekly inefficiency, right? And also this one above it, okay? Not in my opinion, from what I've studied in the charts over a number of years, those inefficiencies are filled. Now, it's very hard to say when because they can take a lot of time to do so, but they definitely want to be on our mind. Now, the reason that I'm cautious in here is I think price is either going to have a correction here, and this is what I said last night, before making an attempt on this weekly liquidity. So liquidity resting above this level. We also have these which represent relative equal highs. They tend to be a real key point for price. So that's where we are on a weekly. We then decant that down onto our daily and we say, okay, is anything different here? We can see the weekly fair value gap here, this inefficient move higher. Let's look what's happened when we've had these inefficient moves before, like this move here was then refilled, not completely, but refilled about 2/3 of this move here. Price then sold off again. Fair value gap filled here, fair value gap almost filled here. This inefficiency, this fair value gap, or these ones here were filled in this move up. So now I'm saying to myself, okay, we've also got, this obviously represents a daily fair value gap here and a 4-hour. So could we see a corrective move into this area here perhaps before price then makes a move higher? So something like this down into the inefficiency, maybe take some liquidity, regain ourselves some market structure, and then look to have an attack on the levels above. Something like this, if we got this kind of pattern, then what I'd be interested in here is looking for the high that has swept this low. So this is our sweep or our raid. Price then has an impulse move above this. Yeah, we would then look for our premium discount levels here, and we would look for this to be retracing into a fair value gap, yeah, or a breaker within our premium discount allowance. So we would want to be seeing this in discount range, and then we would be looking to trade this to these highs first of all, and ultimately the liquidity higher up. Now, are we definitely going to get that? Absolutely not. We don't know what the market wants to do. All we can do is try and predict and play within the probabilities. We just want to make sure the probabilities are on our side, right? So we have this area here that needs to rebalance, and this area here also. So the question is, do we pull back here and go up? What else can we throw in for confluence? Well, if we put our daily on here and here, and now we're going to drop down to our next time frame, which is our 4-hour. What I quite like about this here is if we did see a correction down here, if we were to kind of extrapolate this line, for example, we can see that's on this kind of trajectory. Yeah. Then as this continues to rise, maybe we see something like this. We come into this fair value gap, right? We find support at the daily 20 MA. Yeah. And then if we get that pattern again from here, it gives us that good opportunity where this would be our position where we'd be looking to take longs. All right. Now, contrary to that, if we were to break down, lose the MA, retest it, then the breakdown for here could mean that we're looking to come down to this inefficiency. And then I'd very much be looking to extrapolate the 50 MA and trading between these two areas here. All right. So while they give us a good visual guide as well, we got to remember that, a lot of systems, bits and pieces, algorithms are based around moving averages. So these can quite often act as good areas of support or resistance. And we can see, for example, as we look back here, again, we always want to back up our theories with back testing. If we see what happened here, price moves quite a long way away from the moving average. It has a return to mean. We reclaim this, we retest it. So it's gone from resistance here, resistance here, breakthrough, retest. Price gets comfortable at this level, takes out this higher, which means our structure is shifted. We then target the next moving average, which is the 50 in this case. Once again, once we lose that, we get a key rejection here. We lose this, we retest it. We once again sell off, So we can see the relationship that we have here between support and resistance. And obviously the fact of the golden crosses and the bear crosses, right? So in terms of a bearish cross, yeah, or they call it a death cross. I don't really like to call it a death cross, more like a bearish cross. You're looking for the 50 period, yeah, and the 20 period. We want to see the 20 period on top if we're bullish, yeah, because then they're in order, 20 and 50. When we see the 50 on top of the 20 post cross, that's when we expect some more downside. However, do be aware that these crosses are a very, very much a lagging indicator. Yeah. So this is coming from 20 or 50 days ago. Yeah. Because that's the sample size. So by the time they've crossed, you've most often had most of the downside already. That's why it can often be a good idea if you trade moving averages to wait for price to retest them, pull back into them. Yeah. And also, what you like to see on a strong cross is where they both come very, very tight. You see how they're basically right next to each other here before they separate and then start to expand. And by expand, I mean this gap that you see developing. So there's an upward trajectory, yeah, for both. And what you can see here is this gap widening as we go up, right? Showing that we're just adding more and more strength to the trend on the upside. All right. So hopefully that's useful, guys, on that front. One other thing that I did want to show you as well, which I released in the analysis last night, is B Pro, right? So I use B Pro for my divergences as well as a few other bits and pieces. I find it on the higher time frame is incredibly, incredibly useful. So caught our divergence here, very next candle, we're trading bullish trades. Again, we got an initial target of the 20 and then the 50 if you trade the moving averages. Another bullish divergence here, once again, 20 as a first target, then the 50 again. We can see how the 50 has been suppressing this price for quite some time. We then broke above it, got a lot of people trapped before we had this huge sell-off. You know, this is one of those manipulation type moves or designed to generate liquidity for the market to reverse. But again, B Pro caught the divergence there, gave us a heads up, caught this one here and this one here as well. Had we had one up here of note, then I'd be even more comfortable or even more confident about the correction. But I typically use this on a daily basis is my real key one for divergences. All right. And like I say, I favor using the B Pro. So with that in mind, something else I want to take a quick look at before we go in the next minute, see if we can keep this one to 30 minutes for a change, is the DXY, the dollar index. So once again, we can see here, right? Now we can see these divergences here on B Pro, right? Now, divergences are often catching the corrections or the corrective moves in ongoing trends. So why is that helpful? Well, it either catches the reversal. So we get this, we break structure, we sell off, we've got clear downside targets here and here, and then January 2017's high, and ultimately what we've got resting down here, which is the resting liquidity. I've been saying for quite a while, I expected when we finally lost this move and broke down that this is where the DXY would come. So when we come into this area, I would expect some kind of reaction, and anything bullish on the dollar index is typically bad for risk. So keep that in mind. But also when we're just looking at our moving averages here, right, we can see what happens. We can see the strength in the dollar, yeah? So, you know, DXY is the dollar measured against a number of other currencies, but those bag of currencies is heavier weighted towards the euro, right, for people that didn't know that. So that's why we're measuring the strength of that, because we're using it in terms of looking at it as a safe haven. So when money's taking a flight to safety, it's normally bad for risk assets like Bitcoin and crypto in general. So here we can see we're in this nice uptrend, strong, nice gap between the moving averages. When we lose the 20, we find support of the 50, we reclaim the 20, we're back in, we retest the 20, more bullishness. When we lose the 20, we retest it here. Yeah, so lose it, retest it, support here at the 50, although we deviate. Yeah, when we reclaim structure, we can see once again that this is supporting price all the way up until we lose it, retest them. Here we get our bearish cross, and now we've been pinned underneath them all the way down here, right? So when we flip this, right, and let's just, for argument's sake, that comes down to here, our green one crosses over, yeah? Just do it so that that makes sense. Right, so then when we get this cross, then what we want to see, or well, we don't if it's if we want to be bullish on risk assets, but if price reclaims this and we get this bullish structure here, yeah, then for me, I'm thinking, okay, risk is probably going to take a bit of a hit. However, if we lose this level and we keep going down, then I really do think that risk can continue to thrive. All right, so we take it on a day-by-day basis. The other thing to take a quick look at is our equity markets, right? So the S&P 500, which on this one I'm using ES, which is the mini futures, just smaller contract size. And let me just wait for this to load fully. And then I'm just going to turn off the B Pro. But again, we can see here, when you're using a B Pro, divergences combined with key levels, you can catch these lovely reversals, and these help you catch the corrective moves that then allow you to get back in the overall trend. All right. So looking at this from here, and you'll have to forgive my lines because I haven't cleaned the chart up, unfortunately. But what I can do is this. Using the basis of this heavily weighted more on the moving averages, we can see once again here when price has found support here, how it supports, we lose it, sell off to the 50, retest that, lose both, and we have a deeper correction, which we then target these resting lows, where we expect there to be liquidity. Then when we reclaim them, we can see we have this bullishness. But in the same vein, we can also see that really between this price being taken out of this low, we've then taken this key high here, which has caused this deeper correction into here. We filled this inefficiency. I imagine we've come into this order block here, which we can see this last down candle. Price has found support here. Now, in my opinion, when you see moves like this, you typically want to be targeting a key destination. And on the higher time frames, then I'm going to be looking at this. So the drawings have popped back on. But there's liquidity above here. We ran this liquidity here, which was our initial target. And we see we've now had that correction. We came into here on Friday. We came into here Friday very late, which was a shame, really, because I really wanted to trade this corrective move. However, the chances were the markets were going to close, and I don't like leaving positions open over the weekend, right? You can find gaps and bits and pieces on traditional markets. So one thing we can see here that's of interest is that the 20 is about to cross back above the 50, which is, as we say, bullish, but also lagging. It's representative of what's happened back here. We've got, again, our inefficiencies mapped out here. So a correction here before a move towards liquidity higher up is what I'm looking at the moment. Although if we do start to lose these lows and come back down, then I would expect something a little bit deeper. All right. So look, guys, I hope you've enjoyed the shorter format. I want to make them a little bit punchier on a Monday, right? Wednesday, we're going to do our alt support show. We're going to take chart requests and bits and pieces, really build that out and have a nice hour-long show with you guys. Also, if you have any questions or if you want to know more about me, about the team, you can come and join us. We've got links to free trials in the descriptions. If you'd like access to our calls for free, you can sign up with our partner Bybit. Again, the link will be down in the description. You can get all of our official calls. We're averaging close to 70% success rate, which is incredibly profitable, bearing in mind that a lot of our traders are profitable with systems that have like a 30, 35, 40% win rate. But also just to be part of a community, decide what type of trader you want to be, being part of a supportive community that's run by professional traders, whether you want to build algorithmic trading systems and learn for people that are experts in that, to price action, to swing trading, everything, then it's a really great place to be. And you can come along and try it for free. If it's not for you, no problem at all. But I just want to thank you all again for joining on the streams. Really do appreciate you guys giving up your time to be part of this. If you do have any questions, you can come and find me over on Twitter, or BC_Richfield. Or like I say, even better, come and join me over at the Nest and have a chat with the other traders as well. Blev Notes, thank you. Really, really glad you enjoyed it. English accent sounds good. Brilliant. Love it. Lloyd, thank you. AI, thank you. Thank you, Nitpar, Zombo, Ken, Craig, everybody that was on the stream today. Really do value you all. Dan P, obviously, Crypto Handler, WH Jojo, Steve SEN, Consty. I didn't see you sneak in, Consty. Hey, buddy, good to see you. And anybody else, I'm really sorry if I've left any of you out, but really appreciate every one of you. Have a fantastic week. Do come and grab me on Twitter if you've got any questions, or over at the Nest, and we'll do another stream together on Wednesday. Have a fantastic week, guys, and happy Monday.